Have you ever wondered why most traders blow up their accounts even though they watch hundreds of videos, read books, and follow all the big gurus online? Well, today we're going to talk about the real reason 90% of traders fail, and more importantly, how you can avoid making the same painful mistakes. Welcome back, my friend. If you're new here, I'm your trading coach for today, and in this video we're going to break down risk, profits, and the psychology behind why beginners consistently do the opposite of what successful traders do. And trust me, by the end of this video, your entire view of trading will become clearer, simpler, and far more focused. Now, before we get into it, let me start with a quick story. A few years ago, I coached a beginner trader who told me, I lose small, but I also win small. And every now and then, I blow up with one big loss and reset everything. Sound familiar? It's the cycle most new traders experience. Not because they're not smart, not because they don't try hard enough, but because they don't understand how risk, profits, and survival in the market actually work. And here's the truth: trading doesn't reward the smartest person. Trading rewards the most disciplined person, the person who knows how to lose properly so they can win properly. Throughout this video, I'm going to show you exactly what the 90% do wrong. Not vague ideas, not motivational advice, but actual actionable concepts you can apply in your trading starting today. You see, beginners often think trading success is about finding the right strategy, but what they don't realize is that even the best strategy in the world cannot save a trader who doesn't manage risk. It's like having a Ferrari but no brakes. You'll get speed but not safety. So today we're going to slow everything down and walk through why traders consistently take large losses and small profits, why most traders risk too much even when they think they're risking little, why profits feel small and losses feel big, and most importantly, the mindset shift that separates winning traders from losing traders. And I promise this will be one of the clearest explanations you've ever heard, because I'm going to break it down step by step in simple language, just like I teach complete beginners. By the end of this video, you'll understand how proper risk management actually protects your profitability, why being right or wrong doesn't matter, how professional traders think differently from beginners, and the exact reason 90% of traders fail, and how to get into the 10% who don't. If you've ever felt frustrated, stuck, or confused about your trading results, take a deep breath. This video is going to give you clarity, because when you understand the truth behind risk and profits, everything else finally starts to make sense. So let's jump right in and talk about the biggest trading pain that almost every beginner experiences, but no one explains properly. Let's talk about the real problem, the part no one wants to admit, but every beginner goes through. Because before we can fix anything in trading, we must first understand why most traders fail and why their results feel like an emotional roller coaster. If you're watching this, chances are you've experienced at least one of these situations. You enter a trade feeling confident. The setup looks perfect. Indicators line up. You believe this one will finally be the big win. But suddenly the price moves against you. At first, it's just a small loss, so you think it'll come back, just give it a little time. Minutes turn into hours, hours turn into days, and before you know it, that small loss has turned into a massive blow to your account and to your confidence. Or maybe this sounds familiar. You finally get a winning trade, the price moves in your favor, and you're excited, but after taking so many losses in the past, you don't want to risk giving it back. So you quickly close the trade for a small profit. You take $20 maybe $50. But here's the painful part. The moment you exit the trade, the price continues to shoot up and you realize you could have made much more. That tiny win suddenly feels like a huge missed opportunity. This cycle leads to the biggest internal pain. Traders face small wins, big losses over and over again. And deep down, it feels unfair. You study, you practice, you try your best, yet your results don't reflect your effort. Why? Because beginners naturally do the opposite of what successful traders do. They hold on to losing trades, hoping they will turn around. They cut winning trades too quickly because they're scared to lose the profit. They risk too much when they're confident and risk too little when they're unsure. They trade based on emotions rather than logic. The worst part, most beginners don't even realize they're breaking proper risk rules. Many believe they are managing risk, but without a structured plan, they end up overexposed without knowing it. Let me be honest with you, the pain traders feel doesn't come from the markets. The pain comes from uncertainty, fear, and the lack of a clear framework. This is why your account fluctuates so wildly. This is why you feel anxious in trades. This is why you feel confused when you look at your results month after month. Trading is already hard, but trading without proper risk control makes it almost impossible. You see, trading isn't like a job where more effort pay more results. In trading, more effort without direction leads to more mistakes, more stress, and more losses. The real pain point is this: most traders never learn how to protect themselves. They only focus on how to make money, not how to keep money. And that is exactly why 90% of traders fail. But here's the good news. Once you understand risk and profits the right way, everything becomes easier. Your emotions calm down. Your decisions become clearer and your results become more consistent. In the next section, I'm going to break down the exact concepts you need to understand in simple, beginner-friendly language so you finally know how successful traders think and operate. Because once you fix this foundation, your trading journey becomes a completely different experience. Now that you understand the core problem most traders face, let's go deeper and break down the actual concepts behind risk and profits, the concepts that separate losing traders from consistently profitable ones. I'm going to explain everything step by step in simple language, so even if you're a complete beginner, you'll get it immediately. Let's start with the foundation concept. 1T trading is a game of probabilities, not certainty. Most beginners think trading is about predicting the market. They believe if I can just find the perfect setup, I'll win every time. But in reality, no setup wins all the time. Not even the best traders on the planet win all the time. Professional traders don't try to predict, they try to prepare. They know every trade has an outcome that falls into one of 4 categories: small win, small loss, big win, big loss, the secret. They remove category 4, big losses, from their trading. Once you eliminate big losses, the other 3 categories naturally lead to profitability over time. That brings us to the next concept. Concept 2E, risk per trade controls your survival. If you risk too much on a single trade, you're one mistake away from blowing up your account. That's how beginners die in the market. Professionals do the opposite. They keep their risk small, usually 1% or less per trade. What does this mean? If your account is $1,000, risking 1% means you're only risking on that trade. Even if you lose 10 trades in a row, so you're unlikely, you still have more than 90% of your account left. You're still in the game. But when beginners risk 10%, 20%, or sometimes even 50%, just a few losses destroy everything. Risk is not about how confident you feel. Risk is about how long you can survive in the game. And trading is a survival game first, a money-making game second. Concept 30, your reward must be bigger than your risk. Here's where beginners get confused. They think the way to make money is to win more often. But professionals know the key is something else. Say, make your winners bigger than your losers. This is called risk to reward ratio. If you risk or tend to make 30 is a 1/3 risk reward, you only need to win 25% of your trades to break even. This is why professionals don't panic when they lose. Their winners make up for it and more. But beginners do the opposite. They risk big to win small. They aim for tiny profits like 0.5% or 1%. They hold losing trades because they don't want to accept a loss. This creates a terrible math equation, one you can't win. When your losses are bigger than your wins, even a high win rate cannot save you. Concept 40, emotions become easy to control once risk is structured. Most traders think they have an emotional problem. I panic. I fear losing. I get greedy. I can't control myself. But the truth, you don't have an emotional problem. You have a risk problem. When your risk is too large, emotions take over. When your risk is small and structured, emotions calm down naturally. Once you know exactly how much you can lose and you're comfortable with it, you think clearly, you follow your plan, and you stop making impulsive decisions. Professionals don't rely on willpower. They rely on systems. And when you combine small risk, bigger rewards, a consistent process, you start trading like the top 10%, not the 90%. In the next section, I'll take these concepts and show you a practical example so you can see exactly how a losing trader thinks versus how a winning trader thinks. This example will make everything crystal clear. Now that you understand the key concepts, let's bring everything together with a realistic trading example. I'll walk you through how a losing trader approaches the same setup and how a winning trader approaches it. This comparison will make the difference between the 90% and the 10% absolutely clear. Imagine this scenario. You're analyzing EUR/USD on the 1-hour chart. The price is in an uptrend. It pulls back to a support level and you see a bullish candle forming. A typical trend following setup. Both trader A, the losing trader, and trader B's, the profitable trader, see this same opportunity. But watch how differently they act. Trader A, the losing trader, trader A, enters the trade emotionally, not mathematically. He feels confident because the trend looks strong. He thinks this one is going to fly. He enters a large position because he wants to make money fast. His thought process, why risk small when the setup looks perfect? This is the one. But here's the problem. He hasn't calculated risk. He hasn't set a stop loss. He hasn't planned his exit. He's trading based on hope. The price pulls back a little against him. He thinks, no problem, it'll come back. The pullback continues. I'll wait. It's still in an uptrend. Soon, he is down much more than he expected. He freezes. He removes the stop loss if he had one. He refuses to close the trade because the loss is too painful to accept. Hours pass. The loss becomes huge. Eventually, the account takes a major hit, maybe 20%, 30%, or even 50%. Trader A loses because his risk was too large. He held a losing trade, hoping it would turn. He had no plan. His emotions controlled the trade. This is the cycle that destroys thousands of accounts every day. Trader B, the winning trader. Now let's look at how Trader B approaches the exact same trade. Trader B sees the same trend, the same pullback, the same bullish candle. But instead of getting excited, he stays calm, methodical, professional. Before entering, Trader B asks 3 questions. Where do I place my stop loss? He chooses a logical technical level below the previous swing low. How much am I willing to risk? He risks only 1% of his account. What is my potential reward? If his stop loss is 20 pips away, he sets a take profit level at 60 pips, a 103 risk reward. Now watch what happens. He enters the trade. The price pulls back slightly. The same pullback that made Trader A panic. But Trader B doesn't care. He already calculated the loss before entering. He's comfortable with it. If the price hits his stop loss, he loses 1%. That's it. No drama, no stress. But in this case, the price reverses, follows the trend, and hits his target. He makes 3R, which is 3 times what he risked. Trader B didn't win because he predicted correctly. He won because he planned the trade. He used small risk. He let the winner run. His reward was bigger than his risk. He treated trading like a business. This is how the top 10% operate. The message behind the example, both traders saw the same setup. Both traders used the same chart. Both traders entered around the same price. But one lost big, the other won big. Why? Because trading is not about the strategy. It's about your behavior with risk and reward. When you manage risk properly, your winners take care of your losses. When you don't, your losses destroy your winners. This example shows exactly why 90% fail and how you can shift to the 10%. We've talked about the problems traders face. We've broken down the concepts and we've walked through a practical example. Now let's simplify everything into clear, actionable takeaways. Is the exact steps you can apply starting today to avoid becoming part of the 90% and instead move toward the 10% who trade consistently and profitably. These are not complex ideas. These are not advanced strategies. These are simple principles that professional traders follow with discipline every single day. Let's dive in. Takeaway 1T. Always define your risk before you enter a trade. This is the foundation of everything in trading. Before you click buy or sell, you must know where your stop loss is, how much you will lose if you're wrong, whether that loss fits within your 1% rule. If you don't define your risk, the market will define it for you. And trust me, it won't be kind. Here's the rule: your maximum risk per trade should be 1% of your account, not 5%, not 10%, not I feel confident so I'll go big. Just 1%. This keeps you alive. This keeps your emotions stable. This keeps your decisions clean and consistent. Risk first, profit second, survival always. Takeaway 2, aim for reward that is bigger than your risk. Your risk to reward ratio is one of the most powerful tools in trading. If you risk on 10, you should aim to make a 20, 30 or more. This ensures that even with a low win rate, you can still be profitable. Think of it like this: if you take only 1 trades, you must win 50% of the time just to break even. If you take 102 trades, you only need to win 33% of the time to profit. If you take 103 trades, you only need to win 25% of the time. This is how professional traders stay consistent even when losing 60-70% of their trades. Their winners are simply bigger than their losers. The formula is simple: small losses plus big wins take profitable trader. Takeaway 3, cut losses quickly and let winners develop. This is where beginner traders fail the most. They do the opposite: hold losers, cut winners. Successful traders flip this equation. They accept small losses fast. They let winning trades mature. Naturally, why does this work? Because markets trend. And when you catch a strong trend, that single winning trade can pay for multiple losses. Here's a simple habit you can adopt. When you enter a trade, say this to yourself: my job is to limit my losses, not avoid them. This mindset transforms the way you trade. You stop fighting the market. You stop hoping losing trades will reverse. You stop fearing that winners will turn into losses. Instead, you become a disciplined risk manager, the true identity of a profitable trader. Takeaway 40, use a consistent process, not random decisions. Most losing traders trade based on emotions. The chart looks good. I feel like it will go up. I think the news will move the market. This randomness leads to inconsistent results. Professional traders have structure. They follow a plan, a checklist, a defined risk level, a clear reward target, a repeatable process. You don't need a complex strategy. You just need a consistent one. Your job is not to catch every move. Your job is to execute your process again and again without emotional interference. Takeaway 50, trade small so you can think clearly. If there's one thing you remember from this entire video, let it be this: small risk at clear mind, large risk at emotional chaos. Your brain cannot make good decisions when too much money is at stake. Small position sizes allow you to stay calm, stick to your plan, and trade like a professional. When your risk is small, you stop caring about individual trades, and that's when your results improve most. These 5 takeaways alone can dramatically change your trading life. They are simple, but they require consistency and discipline. And if you commit to them, you will already be ahead of 90% of traders out there. You've made it all the way to this point, and that tells me something important. You're serious about your trading. Most people click away. Most people jump from one video to another hoping for a magic strategy. But you stayed, you learned, and you absorbed the principles that truly matter. So here's what I want you to do next, and this is important. If this video gave you clarity, if it opened your eyes to what the 90% do wrong, if it helped you understand how to finally control your risk and build consistency, then make sure you hit the like button. Why? Because it helps this video reach more struggling traders who desperately need to hear this message. You and I both know that proper trading education is rare on the internet, and your support helps push real, practical content forward. And of course, subscribe to the channel if you haven't already. I release videos just like this, step by step, educational, beginner friendly, so you can grow from confused trader to confident trader to consistently profitable trader. Now I want to talk to you directly for a moment. There's a reason you've been searching for answers. There's a reason you clicked this video. and there's a reason you're still here listening. Deep down, you know you're capable of more. You know your trading results don't reflect your true potential. And you know that if you could just get the right guidance, the right mindset, and the right risk habits, everything could change. I want you to understand something. Every profitable trader started where you are right now. Confused, frustrated, doubtful, unsure if the dream of consistent trading was even possible. The difference is they didn't quit. They didn't keep doing the same things expecting different results. They learned the truth about risk, profits, and discipline, the same truth you learned today. Think about what you now know. You understand why most traders fail. You know how big losses destroy accounts. You understand the power of risking small and aiming for bigger rewards. You've seen how a single mindset shift can change the entire outcome of a trade. And you understand that trading success isn't about predicting. It's about managing. That knowledge alone puts you ahead of thousands of traders who are still gambling without a plan. Which yield gambling without a plan. But knowledge is only the first step. Execution is what transforms your trading. So here's my challenge to you starting today. Commit to becoming a disciplined risk manager. Not tomorrow, not next week, today. Lower your risk, define your stop loss, plan your trades, stick to your process, and stop thinking like the 90%, because once you adopt the habits of the 10%, the consistent, calm, strategic traders, your entire trading experience starts to shift. You stop stressing, you stop chasing trades, you stop overthinking, and you start seeing progress that feels real, steady, and sustainable. Now, before you go, I want you to do something powerful. Drop a comment below and tell me, I'm joining the 10% right there. Not for me, but for you. It's your commitment, your declaration, your reminder that you're taking the first step toward a better version of yourself in this trading journey. And I promise you, once you fix your risk habits, once you master your discipline, once you start thinking like a professional, the results will follow. Slowly at first, then faster than you expect. So if you're ready for more trading lessons, more simple breakdowns, and more practical guidance just like this video, make sure you subscribe and turn on the notification bell so you never miss the next one. Thank you for watching. Thank you for investing in your growth. And remember, trade small, stay disciplined. Think long term. That's how you win. See you in the next video.